Hello, folks, and welcome back to another episode of the Daily Crypto Byte. Today is Monday, April 25th. New week, but a continuation of right where we left off on Friday. Some pretty heavy sell pressure entering this market here as we start the week. Bitcoin down, traditional equities down, rates down, interesting as well. The 10-year in particular down hard. The DXY continuing to rip up. We're actually not too far off the lows that we saw in the traditional equity markets in the middle of March. So we'll take a look at that, see where we're at in Bitcoin back when we retested the lows back in March, and see where we may be headed from here. But before we get started, CJ, how are you doing today, my friend?
Doing well, Monty. Doing well. I don't know what is more entertaining, watching the Bitcoin chart or perhaps watching the paint dry. We'll see. But this range is it's definitely testing the nerves of many, including myself. But interested to get into some charts today with you. How you doing as well?
Yeah, I'm doing well, CJ, doing well. One chart I saw you share over the weekend on Twitter that I actually think may be a good starting point is the Bitcoin and the NASDAQ, and that tightening correlation between the two. Because, like you said, Bitcoin, this market is ordinarily expected to be incredibly volatile. We're expecting big swings, strong intraday moves, and also we're expecting independence from traditional equity markets. But that is not what we've been seeing. In fact, heavily correlated with the traditional equity markets. Obviously, lots of that having to do with macro concerns, but we're not too far off the lows. And on Friday in the cocktail hour, many analysts were, very bearish, expecting a retest of these lows. And we need to prepare ourselves for that. So I've got a couple things I want to talk about in terms of Bitcoin, in terms of historical precedent, where we were at on March 13th, and where we're at today. I think there are some similarities. So that's what I got for today. Anything you want to start us off with, CJ?
Yeah. Why don't I start with that BTC Nasdaq chart that you had just mentioned, because it's pretty apparent how the increasing correlation is starting to occur.
Oh yeah.
This is a pretty common feature on TradingView. It's pretty awesome if you just type in one symbol and then hit the divide button and then put in the other symbol and then just hit enter. You can get a ratio of basically a chart of any asset relative to any other asset. So what we're looking at here is Bitcoin priced in IXIC, in other words, the NASDAQ composite. And you can see, Bitcoin has done its own thing. But the one interesting item that is a little counterintuitive, I guess it makes a lot more sense now, but you can see this tightening correlation as we get into this range. But that is not a lower low like what we had in the summertime, because the S&P and the NASDAQ were really outperforming, or they were still riding that bull trend, whereas Bitcoin really pulled back hard. Now you're seeing the NASDAQ pull back in kind of a bearish way, and Bitcoin, trying to hold up, trying to continue to trend to the upside, but still just being dragged down by an increasing DXY. So this is definitely a chart I think is worth monitoring and just seeing how the performance evolves over time. But it's pretty apparent you can see this tightening correlation as we continue to trade within this range. Now, going over to yields, this is something that I do want to touch on, because although we are down below 280 and are down about 4% today in the 10-year Treasury note yield, stocks are still taking quite a beating. I was telling this to Monty before the show, but I kind of look at it like a trinity. You have, rates, which have been absolutely killing it. You have oil, which has killed it, but is now looking to fall into a descending triangle. Like if we don't create a new higher high here, I think we're pretty high. The cards are the odds are getting stacked more towards a decline towards like $82 if we break from this descending triangle. And then ultimately the third one is the DXY. And you really need all three of those assets to come down in order for a lot of risk on mentality, or at least the S&P, to continue to trend. And we're just not seeing that. The DXY is still continuing to trend to the upside despite some of these divergences that we've mentioned. It's just very indicative of investors fleeing into cash and not wanting to be exposed to risk assets at the current point in time. And I don't blame them, because when we look at certain technical metrics with Bitcoin and some other assets historically, there are some interesting things to note. I do want to point out like a critical level. where we're trading right now. Every time we test these lows at roughly 38K over the past couple months, we've reached periods of extreme fear only to then bounce and then rally and just ping pong around in this range. Perhaps this time's different. Perhaps this time is one time we break down. Either way, I think you have to be prepared for both situations because this is some critical support. And I do want to show another viewpoint, specifically with the 3-day chart over Bitcoin's lifetime and what we've seen when we've consolidated and actually lost this level. Generally, bad things have happened. Historically, after a very large bull market, per like approximately a 1 to 2 year bull market, prices come down, consolidated at this level. Once we've lost this level, we've fallen about 50% each time. You could see the same thing in 2016, 2017, 2018. After the 1 to 2 year bull market, we consolidated at that level for a month or two. And then when we lost it, we dropped from 6K to 3K. This may not seem like a big drop, in hindsight, since we've rallied so far. But then again, we did experience a 50% drawdown. And now, as you can see, we're at a very similar point where we've had that 1 to 2 year bull market and have now come down and are testing this level. And we're just starting to lose it. So, is this time different where, we drop, say, 50% to about 25K, something like that? I think that would be a good place to look for an ultimate low to really go all in and start accumulating. Not saying we have to go there, but the longer we consolidate at this level with weak momentum, I think the odds just kind of increase for the bears. But that's just one breakdown level that you should be prepared for either way. So just something to point out, just an observation, not saying it has to happen or it will.
Yeah, always good to prepare yourself for all possible scenarios, especially when one of them is, this market really breaking down here. And I just want to quickly share another piece of data that kind of just reiterates, or it's another way to visualize that correlation between Bitcoin and the NASDAQ here. And, basically what you're seeing here is the correlation coefficient. And as you can see, not only are we at all-time highs in terms of the correlation between Bitcoin and the NASDAQ, but it really is the most sustained correlation between the two that we've seen in the history of both asset classes. So, obviously the COVID one-to-one movement of all these assets was another period in which we saw an extended period of correlation. But now, we're kind of surpassing that in terms of, one-to-one movement. And one thing that is worth noting is that, these correlations are tight until they're not. And one thing that often acts as a catalyst for a breaking of this correlation is short squeezes and looking at funding rates. And actually now, for the first time in quite a while, funding rates actually are flipping negative. So what this tells us is that in order to get short right now, you're actually having to pay a premium to the long in the perpetual futures. So there is higher demand for the shorts. That has historically been indicative of potential short squeezes. So just be aware of that, because even though sentiment has been largely negative over the last couple of weeks and Bitcoin has been pulling back, there's still been longs piling into this market, and we actually haven't really seen the funding rate all that negative, with very few exceptions being the end of March, before we kind of pulled back pretty hard here. So now that we are seeing these shorts stack up, that's worth noting, because like I said, in the past, that has been a catalyst for a decoupling of that correlation between Bitcoin and the NASDAQ. Now, one other thing I'll say is that just looking at these charts from a historical perspective, we are not too far off these lows here. We are approaching the levels at which we saw a bounce in the middle of March. And, I think we need to prepare ourselves for both situations. Prepare ourselves for a potential bounce, but also prepare ourselves for a potential breakdown below this level, because I think at this point, both are likely, or both are, equally likely scenarios. I think both could play out. Sentiment is very, very bearish, and that, could play out either way. But one thing that is worth noting is what happened last time we retested these lows in the NASDAQ. It was also, virtually the same in the Qs as well, and what that led to for Bitcoin. So just taking a look at, Bitcoin here, or let's start with the Qs actually. Taking a look at the Qs, last time we retested the lows was on March 14th. Let's take a look at where we were at for Bitcoin on March 14th. We were about here. So right around this same exact level that we're at now. 37.8K. Right now we're at about 38.5. So we are, not too far off where we were at when we retested the lows. So essentially what I want to see for Bitcoin is if tomorrow, or if, even later today, we see the Qs come down to retest 318, we see the NASDAQ come down to retest 1300. I want to see Bitcoin stay above this level of 37.5K because that is where we were at when we retested the lows. And as you can see, when we got that bounce in the Qs and in the NASDAQ, obviously that was a historic week for traditional equity markets. It did lead to a nice increase in price in Bitcoin. In fact, led us all the way up to retest the 200 period smooth moving or 200 period moving average. So I think that is a possible scenario here. But like CJ said, the market is looking particularly weak. We need to also prepare ourselves for a break below this level. So for me, it's pretty simple. I think that a break below 37.5K for Bitcoin basically kind of invalidates that, higher low structure that we've been able to maintain since the bottom we set all the way back in January. So really, this is a critical day for Bitcoin, a critical week, most definitely. And I want to see us stay above that 37.5K level, regardless of what we see in the traditional equity markets. So, this is a really critical point with traditional equities retesting critical levels, Bitcoin funding rates flipping negative. That could potentially be a catalyst for decoupling. That's yet to be seen. So just keep an eye on those funding rates, keep an eye on liquidation numbers, and also keep an eye on that critical 318 and 1300 level in the Qs and the NASDAQ, respectively. Oh, you're on mute, CJ.
Thanks, Monty. Appreciate it. Good stuff as always. If you guys enjoyed today's episode, please hit the like and subscribe as that helps us in the channel quite a bit. Also, if you'd like to see some of our trade insights and things that we're doing in our own strategies, please check out the link in the description below at marketrebellion.com/trycrypto. Thank you guys for watching. I hope you have a wonderful day in the world wherever you are, and we'll see you next time.